Good morning. My name is Jacqueline Smith, and I am one of the conference producers on the Aviation Week Network team. Thank you for joining us for our final day of sessions at MRO and Aero-Engines Asia Pacific Virtual. We hope you've enjoyed the conference so far, and that you've been able to take advantage of the matched networking opportunities and one-on-one meetings available in the GRIP platform. Make sure to find some time today to check out all of our exhibitors and the many products they have listed. There is still time to show interest and schedule meetings, so be sure you don't miss out. Today's sessions will cover more hot topics, including an update on the USM market, the latest in aircraft interiors and cabin modifications, and a discussion with leading independent MROs in the Asia Pacific region. The majority of the panels and presentations taking place today will be broadcast to you live. Our live sessions offer interactive Q&A and audience polls. I encourage you to take an active role in the sessions, and we appreciate your questions and feedback and market insights. If you see a session on the agenda that you may have missed live, don't worry. You can find all sessions and presentations available on demand. Just go to the Event Agenda tab and scroll up to see all past sessions. Then click on the presentation title you are interested in viewing on demand. Remember, all sessions will be available for viewing on the GRIP platform until October 1st. After that, Aviation Week will send a link to all of our all-access attendees that provides exclusive access to all sessions and PowerPoint slides on the Aviation Week events website. On a personal note, I'd like to say a sincere thanks to everyone who has tuned in and participated in our virtual event this week. Your willingness to try something new, step out of your comfort zone, and support the necessary move to virtual speaks volumes about our industry's ability to embrace change and innovation. That being said, I'm sure I'm not the only one who missed seeing everyone in person this week, and I am looking forward to September 21st through 23rd, 2021, when we hope to see you in person at next year's MRO Asia Pacific in Singapore. Be sure to bookmark events.aviationweek.com for a complete listing of all upcoming events and updates. Now, to kick off day 3, let's get started with our first panel discussion on managing the transitional USM market. Special thanks to our sponsor, KG Aircraft Rotables, for their generous support of this session and event. Be sure to check them out in the virtual exhibition. Our moderator for this session is Rahul Shah, Senior Vice President of Strategic Growth and Business Development for AAR. As Senior Vice President, Rahul manages operations, sales, and marketing efforts across Africa, India, the Middle East, and the Asia Pacific region. Rahul, thank you for joining us today, and now over to you.
Thank you, Jacqueline. Good morning from Singapore. Welcome to this session, which is very important and dear to the hearts of everyone today, with all the stuff happening in COVID-19 and how that is impacting our businesses, on how the retirement's going to impact the used serviceable market and how that's going to translate into cost-effective solutions. Whopping 6,400 plus aircrafts are going to be retiring between 2020 to 26. Of course, out of that 18,000 aircraft stores today, we don't know how many aircrafts are going to return to the service. And of course, all depends on the market and the traffic coming back. Why is USM is so important? As you all can imagine, USM can help airline and MRO to reduce costs, and it could reduce costs by 20 to 40% of the list OEM price compared to, depending upon what parts you're talking about in aircraft or engines. With that, this is going to be very important to figure out how that's going to impact, and this session especially, we're going to focus on what are the trends, what are the impact to the airframe OEMs and airframe MRO facilities and engine overhaul and engine OEM. So with that, I would like to welcome our panel members, John Brooks from Boeing. He is director for Used Serviceable Material. That looks like Boeing has given a priority on getting into Used Serviceable Materials. John, welcome.
Thank you.
Luke Moran from MTU Maintenance. Luke has been director for region in Asia Pacific for MTU, who does engine maintenance. And of course, Ramnik Soni, who is the COO of Elloris Aerospace Limited. Welcome, guys.
Thank you.
Good
morning.
Good morning. Good morning to all of you. So with all the stuff happening, so the proceeding is going to be like this, guys, that we're going to be going after questions and answers for a while. And then after each questions, we have a poll questions for the audience. And then at the end, we have a question answer session from the audience and participation, so we can be a more interactive session. So I'm going to start with the first questions to the panel member. With the forecast increased retirement for both narrow body and wide body, what role do you see the USM is playing in the recovery of the industry, and what does that mean for your company? John, would you like to go with that?
Sure, thank you. Well, I think it's going to be obvious that USM is going to be a big part of the recovery. Just having the ability for our customers and airlines and MROs to go to a market and pick up quality parts at a value that's, they're not paying list price. It's key. And the market's been around for a while. All of us, we all love this business, and it's all about the customer, and our customers are struggling right now. So, the USM is going to give our customers the ability to go find cost-effective solutions to their demands. So it's going to be huge. The amount of aircraft that are parked and going to go into teardown, it's going to cause some market pressure at some part number level. But the reality of it is, it's been going on for a while. When you take a look at some of the aircraft out there, the market was, pre-COVID, there was some airframes where the market was already saturated, and how it's unique for Boeing is USM is just another lever for us to pull in our solution for the customer. You take a look at our new part abilities, our services, our repairs, and USM is just another way for us to support our customers and really listen to what they're looking for and offer those solutions at a price that makes sense. And make sure the quality is good, and the key is to keep our customers flying.
Great, thank you, John. Ramnik, please.
Yeah, sure. No, I think clearly once things start recovering, which is kind of the big question everybody's trying to solve, obviously USM will be a great tool for airlines to save costs, especially coming out of a period of financial distress over the next few months, and with more debts. And I think really the question is, how do they, what happens in the near term? Because in the next 3, 6, 9 months, with the increased retirements and redeliveries, obviously there's going to be a big pool of green time engines, and everyone's trying to reduce the shop visits to save costs and run out the green time, and that obviously lowers the demand for USM in the near term. I think once the recoveries start, obviously I think USM will benefit because of the financial pressure, and for the different players, it's really a question of what your cost point is. Because there's going to be like John was mentioning, there's definitely going to be pricing pressure, and it's going to be a different cost level than it was historically.
Okay, good. And I agree, like both the price pressure is all about demand and supply. And as the demand goes down or stays, but supplies goes up, obviously there's going to be price pressure, and what point, the acquisition cost becomes viable for the buyers to go after those assets. But just stay with that discussion, because we have another question which focuses on that. Luke, would you like to comment, please?
Yeah, sure. So for us at MTU, I think we are seeing this as an opportunity to roll out some of the solutions we already implemented in the past. We have something called the mature engine solutions, which is basically based on an extensive use of the used serviceable material. We've done that in the CF6-50 in the past, CF6-80 at the moment, Pratt 2000, and somehow we were limited on the rollout of such alternative repair solutions on the narrow-body fleet. And yeah, we're a bit welcoming that wave of used serviceable material becoming available because we're seeing this as an opportunity to roll out solutions we already have and they're already working, and then we can put it to a wider scope of work. The funny thing about it, or the difficult thing about it, is the more you're playing with assets that are becoming older or use serviceable material, actually, the more you need creativity and the more you need technical knowledge. So for us as an MRO, we're welcoming it. We're ready to take that challenge with regards to creativity of the work scopes, with regard to technical knowledge that is required in order to find the right balance between cost saving and reliability.
Okay. Well, that's good. But one of the thing I would like to highlight here is, since when you talk about retirement, you're talking about more aircrafts are more prone for retirement, and acquisition would be probably more than 15-year-old aircraft for today. I mean, if you look at it, 75 or 78% of narrow bodies are below 15 years old. So we don't think that would be coming online for a while, but anything over 15 years of the age group probably would be a candidate for retirement. Okay, so that talks about that. Now, do you see any positive news coming out of that within 6, 8, or 12 months for the retirement and used serviceable material availability and a price point? I know, Romnik, you did reference a little bit on that, but John, what do you think about that? The price point, the availability, and where it's going to be the supply. Is it going to be oversupply, or you think it's going to take time before it hits the market and airline and MRO facility could be able to take the benefit out of it?
Sure. Well, I think it's going to take a little bit of time, but let's take a look at this from the customer standpoint. So, if there's any kind of silver lining in any of this current COVID situation, is the airlines and the consumers are going to be in a situation where they can potentially name their price. As some of these aircraft are already being torn down. Some of the aircraft that are being torn down, the harvest list is getting smaller and smaller just because the market's already saturated. So the customers are going to be in a good spot here to really shop hard for parts to compete with the repair price. I think everyone's going to be trying to be as clever and creative as possible to support customers. So they're going to have access to exchanges, leases, discounted prices for parts that they'd be paying a lot of money for about a year ago. So I think if you take a look from the customer standpoint, it's good for them. On the parts selling side, I think that we're all going to be clever and creative to find ways to support our customers, and it really is going to come down to having a large scope of service offerings that you can give to the customer. That might not just be parts, it might not be the price, it might be engineering support or access to data. So I think it's really going to be important to be close to the customers, listen to what their needs are, and find ways to adapt and facilitate their requirements. And that's going to be key coming out of the recovery here. And yes, the market's going to have a lot of saturation at certain platforms, but there'll be other airplane and part numbers where it's still going to have a good market value because there's just nothing in the market yet.
Okay, thanks, John. I think that this is a time for our first poll questions. Jacqueline, can you go ahead, please?
Hey, Raul, our poll is live and our attendees are currently voting in it. So we'll just see what they're coming in with as we're tabulating the results. you want to add any context here. So the question is, retirement wave and USM engine green time availability will allow operator to avoid shop visit events for short term. And the options are strongly agree, or disagree. And it looks like overwhelmingly agree has it, with 64% of respondents saying they agree with that statement.
Excellent. Well, that were probably expected, right? I was expecting around 80%, but okay, that's fine. And, of course, strong agree and agree probably could go to 60, 80%. I don't know how that mix come out, but that's great. That's great. I think that's pretty in line with what everybody's thinking today's market. So that's good. Okay, that leads to our second question, guys. So, with all the, narrow body and wide body and coming back into retirement, we may not think that all the aircraft could go straight to the teardowns, because there are certain aircraft and engine might have a, if they're leased to the airlines, they already have the maintenance reserve agreed to, they might go with an option to get the maintenance done before they go to retirement, because they want to utilize it and then use it to their advantage. However, the second question is right here. So what is the cost benefit analysis for an oversupplied environment on the used serviceable material? How are the airlines approaching changing USM strategies, and how has the need for liquidity put pressure on airlines to sell material to ensure cash flow? Anybody can jump in, guys. Ramnik?
Okay.
Yeah, sure. I mean, I think if you talk about cost benefit analysis, I think you take the customer perspective. Obviously, to the extent that there are shop visits in the next 6, 9, 12 months, which is I think it's going to be driven by engines that are supporting the cargo fleet and the regional fleets. They're going to be more active. Obviously, the overall cost should be reduced quite a bit. So that's definitely the case. I think we're seeing that some airlines historically who were reluctant to use USM are becoming more open to it. So that's kind of good for the whole market, I think.
Correct.
Yeah, and I think in terms of the airlines liquidating, yeah, I mean, with the large airline that we work with, we haven't seen that yet. I think that clearly that could happen. Again, the demand is more for the pedigree parts. And airlines are typically reluctant to, part with those. So we have to see how that evolves.
Okay. John?
Yeah, I agree. From the customer standpoint, the oversaturation and oversupplied market's going to be good for them. As I mentioned before, they can almost choose their price in some commodities. I think from the on the part selling side, I mean, we are all going to be competing for that limited opportunity right now until the market comes back and the fleets start coming back and the flight hours start coming back. So again, it's going to come down to understanding that there is going to be a lot of competition out there, and it comes back to what can you offer your customer in the complete picture, from not just parts, but is it services, is it engineering, is it access to data? And with the airlines potentially pushing their inventory to the market to create to monetize it, to create some cash flow, it's going to cause a lot of us to be the trading partners and customers in competition all the same day. It's already happening now, but I think it's going to be important for all of us to understand that we are here to keep the customer aircraft flying, but we're going to need each other to trade parts with. And I think the USM market's going to get bigger, so there's going to be a good opportunity for us to actually trade more, and it's an opportunity for for Boeing again to really be flexible and offer customers what they want. But we're going to need to trade with other partners out there and do deals, and it's going to be the fun part about it, because there's going to be a lot of parts to trade, and I think it's going to be keep the aviation network even tighter, again with the goal of keeping our customers' planes in the air.
Okay, good. Luke, you want to chime in this one, or you want to wait?
Yeah, no, just one more comment from my end is that I think right now there is a big question mark on the market, which is what is the fair market value? Because as Ramnik said, although the airlines are desperately looking for cash, it looks like they're also not willing to sell at any cost. And you're right now in a market where you don't have a lease demand and you don't really have a piece parts demand because there are not really a lot of shop visits going on. And everybody is wondering what is the fair market value. And so what everybody is doing is right now evaluating the assets at a very low value, um, especially at the price point where you're seeing that the asset owners, lessors, and airlines, they are not willing to let those assets go at such a distressed price. And what we're seeing is that anytime or every time the airline is actually getting cash out of the engines is via sell and leasebacks. So when they are guaranteeing the value return out of their future operations. But on a purely tear down side, we're seeing very little transactions at the moment, meaning that also the pricing or the fair market value of the piece parts being available now is mainly driven by the lack of demand more than an oversupply. That will come at a later stage.
Okay. No, that's great. I mean, I think you hit the nail in the coffin here. One of the things I was going to chive in after this is that, hey, what these, I think the traders who are out in the market for asset purchase, there is a definitely a unknown factor what's the valuation could be today. I mean, do I make an investment today and then wait for another 6 months to see the market drop? So my asset value today could drop 30%. I think it's a wait and watch policies. Everybody's looking at it. And so that's one of the questions I wanted to drive at is that how is that going to impact the used serviceable material availability? Because if everybody's going to wait and watch to purchase these assets, and let's say everybody wait until next 6 to 8 months to figure out the demand and supply, I mean, the used serviceable material availability doesn't just come in like that, right? There is a gestation period of 3 to 6 months before you acquire the assets. So the timing is very correct, and very, very crucial here. Look, you're right on it. And I think Ramnik has mentioned as well about the asset value and how that's going to transpire into availability to help markets for the airline and MRO shops. I think that's great. It's going to be very critical to figure that one out. But until and unless, like Luke mentioned, until and unless MRO and airline figure out what their maintenance practice is going to be or maintenance plan is going to be in next 6 to 8 months, it's going to be very difficult for any MRO or any parts trading companies or any OEMs to figure out what demand, what supply, and what price points you want to be able to achieve that. I think that's great. John, you agree with that?
I do, and but I also think that there are some companies out there buying parts on speculation, and that's great. That's moving parts. But I also think the other side of the USM market is that we're all very clever and nimble, and if planes are sitting in the desert or that are tear down site and there's demand, I think we're going to have the ability to go get that part off that plane and move it pretty quickly. And I think that's what's nice about the USM market and the network is we can move quickly. So I think there's going to be, as we see the air traffic pick up a little bit, I think we'll start seeing some more purchasing, some more speculative purchasing. Maybe they'll feel like there's some risk that's coming out. But I also think that supporting AOGs and emergent demand is how this part of the market grew up. So we should be. I feel like we'll be okay, and as long as you have a good infrastructure in there and you can offer your customer quality parts, good quality, and get them on time, I think we're going to be okay. You're going to see some more buying picking up here in the next several months, hopefully, as the trends keep going in the right direction.
You reckon 6 to 8 months from now, John, probably would be the activity will pick up on spares and availability and purchasing spree from the traders?
Yeah, I think that the trading is going on now. I think that again we have to see a positive trend in the flight activity going up. But I think that there'll be people buying parts and speculation out there, and The planes that are currently in the desert right now, they'll start working the harvest list and getting the airframe parts pulled off, and start getting them to a shop and get them ready to go to either offer exchange or outright at market value, whatever that market value is of that day. So I think hopefully we'll see a pickup in that activity here starting towards the end of the year, early part of next year.
Okay, Ramani, do you have anything to add here? Yes.
Yeah. I actually had some little bit of connectivity.
I know you dropped off. No problem.
Right. But so I'm. The only thing I would add to this is that I think that what we're seeing right now. I mean, we are in the market to acquire new engines, but I think that the I think that the companies that hold the engines are currently not. You're not getting the acquisition cost to compensate for the risk, involved with the uncertainty of when the demand will recover. I guess the hypothesis is that in 6 to 9 months, maybe that changes, and prices come to a point where it makes sense for investors to acquire these engines and park them out.
Great. Well, guys, that's the time for the second poll question. Jacqueline, can you please get in the screen and ask the participants, please?
I am back on the screen. So we have launched our second poll, and our second poll is: what impact will OEM piece part pricing have with the retirement wave and possible influx of USM? And the options are more discounts and rebate, freezing of annual price escalation short term, and business as usual. And our audience is answering, and we are just tabulating results. And just a quick reminder to everyone watching at home, we do have MRO Transatlantic Virtual coming up at the end of October. So if you're enjoying this session and our sessions yesterday, definitely join us for Transatlantic, October 27th through 29th. All right, and it looks like 78% of respondents voted for more discount and rebates. The freezing of annual price escalation is about 33%.
Okay, well, that's pretty as expected, right? I mean, that's a pressure from to the OEM on trying to figure out how they're going to compete with USM and how they can continue creating that market share, what they have, or lose it. Okay, so that's come to our next question, and it is targeted to John specifically. We have seen engine OEM active in the USM strategy for long. Do you think that will be increased pressure on airframer and component OEM to get into USM strategy aggressively? John?
Absolutely. For Boeing, USM, as I mentioned before, it's just one of the levers we can pull and part of our portfolio. And my leadership and my colleagues, we've been focusing in the last several years on bringing the USM service offerings into the Boeing company and really complement our new part sales. Because it's not just about selling parts for Boeing. It's our tapping into our global supply chain network and making sure we have the right parts at the right place, having the ability to do exchanges and sell parts aggressively at market value. So, what's interesting, the poll question we just had was talking about what's the effect going to be on OEM piece parts, and my mind went right to business as usual. And I say that because, business as usual for us at Boeing, really trying to keep our finger on the pulse of what's going on. And that might mean at certain commodities, we have to be aware of market prices for on USM parts because we're not going to sell them if we try to hold our price. So again, I think it's business as usual, but peeling back, looking behind the curtain on that one, that means that because we are constantly looking at demand, looking at our inventory levels, looking at what our customers are looking for. And if we see that customers are on a certain commodity, they're only trading in overhauled or serviceable parts, then we need to be in that business, and that's where we're going, and that's where our leadership has taken us, and that's where we have this really this dedicated focus on USM to complement our overall service offerings from Global Services and really try to listen to customers and be able to support what they're looking for, whether it's a new part, a used part, an exchange, a lease, or a repair.
Okay. So John, would this service be part of you said Boeing services, what you're offering, the Gold Care or PBH is an extension of that? or it's going to be separate P&L division for Boeing on this used serviceable market?
So the used serviceable actually just folds into the entire organization. So it supports all aspects of Boeing Global Services parts business. So again, whether we acquire a plane and tear it down for the piece parts to support programs, that's one piece of it, or we're partnering with an MRO or an airline to help sell their excess. It all folds into the larger picture. So it won't have its own individual P&L per se. It's just part of the overall solution.
Okay, that's great. That's great. I think that's then time for the third poll question. Jacqueline, can you please shoot it out, please?
Yep, we have launched our third poll, and I'll read the question out so everyone knows what it is. Question 3. The pandemic has provided prime opportunities for consolidation, divestment, mergers and acquisitions, and private equity investment. Is that a high probability, medium probability, or low probability? And we are just tabulating results, and I'll have those for you in just 1 second.
Thank you.
No problem. It looks like, as of right now, about 60% of people are saying there's a high probability, with 30% at a medium.
Yeah, that's it. I think that also tells me the viewers and the participants are pretty much in the game, because that's what's happening in the market. They are very worse. So compliment to whoever listening to this session that you guys are in. Okay, so that goes to third, our last question, and then we'll go into our question answer session with the participants and audiences. You know, pre-COVID, if you look at the used serviceable market, was close to around $5 billion, okay? And out of $5 billion, as you can imagine, 60% of is engine material and 37% is on components, right? So if you look at those two segments, which is obviously going to drive the USM market going forward, and it's all going to be high-cost driver, which is going to get impacted through the new OEM price to say 20 to 40%, and that's going to drive the market. However, there are many aircrafts, or 55, and again, narrow body is going to be the key ingredients on this USM, because most of the wide bodies are still delayed. They're going to be stored, or they're going to be coming back, will be later than narrow body. So I think my question here is focus on narrow body, engine and airframe, and that way we can get focused on that. But 55% of the narrow body fleet is leased. Okay, so it's also depending on how the lessor is going to determine their asset base versus they have a chance to release to the operator. Another operator airline tried to release. I mean, IBA just announced last week more than 1,000 aircrafts are going to be lease return within a year. Okay, so I mean that's a whopping number, right? And how that's going to impact the leasing companies, of course, that's completely different topic, and we're not going to touch that here. But I mean, so engines, right? I mean, if you look at 60% of $5 billion is engines, right? So how that's going to impact the short and long-term technique for engine overhaul, and of course heavy maintenance jobs, and are we seeing the race at the bottom? And do you think the market having enough capacity going forward to handle the teardown in timely manner? Like we talked about it, right? It's going to be delayed process depending upon airline and MRO, how they're going to come out. But this question is booming, and I think I would like the panelists to focus on zoom into answering those. So, Ramnik, would you want to go for that?
Well, this is a strategy for maintenance shops. Luke would probably have more insights on this. I think, on teardown capacity, I just think that theoretically you're going to have a lot of engines that are available for teardown, but in practice, it has to make sense for an investor the return has to be there for them to pull the trigger on buying the engine and and parting it out. And that's a determination that investors will make, on an ongoing basis. And I think that will result in a little bit of a, kind of a gradual, uh, process in terms of how supply enters the market. Kind of trying to match demand because of, the investment returns. Obviously, the legacy material is there. So, in the short term, you definitely have an oversupply environment. Uh, you know, 9 months down the line, it kind of, depends on, I mean, it's the question that everybody's trying to figure out, which is, what is the path of the virus?
Right.
And at what rate do engine shop visits recover, right? So,
Good. Luke, this is a hot
Yeah,
topic for you, my friend.
yeah, probably. But yeah, you mentioned race to the bottom, and I don't believe in it. I think it's always more complicated than this. And actually, as an MRO, as an engine lessor, as an asset manager, you always have three things to consider: is preservation of the residual value for the owner, reduction of the cost of ownership, and reduction of the cost of operation. And this is the mix that you need to look at for every single MRO decision you make. Is which facts you need to consider more than the others, and that's depending on a specific operation, a specific mission. I do not believe that reliability of the engine will not remain a priority. So you can make all the extensive use of the used parts you can, and you can probably reduce heavily the shop visit cost. But if that is coming at a price where you're not getting the same MTBR or the same reliability, then that cost for that engine not being able to operate until its full stretch is maybe costing you more than the savings you've made on that MRO. And that is why I mentioned every time you make a decision regarding used material, you need a certain level of technical consideration. It's not just as simple as looking at dollars for dollars on an MRO bill. Um, and I'm saying this not as MTU MRO, but as being an engine lessor, having my own engines to manage. So that is my view in terms of asset owner. Um, and everything that we do is ultimately a kind of dollar per cycle. Do you want to privilege indeed the cost of operation, or do you want to avoid interruptions in your operations? So these kind of decisions are what is making the right outcome out of the parts. You will always find some options where it's a salvation. And a good example to that is probably, I would say, the V25. We're talking about the narrow bodies, but look at the V25. You get that LLP stack, which is completely uniform. And right now, if you have to face that shop visit where you have to replace the entire LLP stack, you need to go into each and every single module and try to find the used parts you need to rebuild your engine. Right now, it's still difficult to find those LLPs for the reasons we mentioned before, because yeah, we haven't seen the teardowns yet. So you're facing a shop visit cost, which is almost at the edge of the engine to being deemed BER. So yes, you can definitely use those used LLPs. Now, what else do you want to use? Are you going into the HPT section with used parts only, or do you want to make a mix? So it's always a kind of, yeah, it's more technical answer than just a
Yeah.
simple one.
Well, it's all about
And,
cost benefit, right? I mean, when
yeah,
airline is struggling to make a liquidity for their cash flow today, I mean, the first thing they're going to look at, what can they do today to conserve the cash, right? So I agree with you when the strategy, what you're talking about, making a gold-plated engine or making sure that happens when you have cash to reach airlines and they have enough cash to fund into that. But when you're talking about survival, you're going to have that the mindset from the airline and MRO shops where they're going to cut the cost and whatever it is. But I think it's a long debate. Now we have 5 minutes left to our session, and I would ask the audience for the questions. Jacqueline.
Hi, guys. Our first question from the audience comes from Peter Lundberg. And he says, and this is directed to all of our panelists, do you foresee a consolidation of the active suppliers and players in the USM market? And will the OEMs and tier one suppliers become more dominant?
Anyone? John?
Yeah, I would like to push that question back to you, Raul, being more independent than probably some of us in the used material market. I mean, for us, we're not seeing it coming for MTU itself, I guess, because we're already kind of having a vertical integration from being able to purchase the engines, burn the green time, managing the teardown, managing the repair of the piece parts, and using the piece parts in our own shop. So every time you have a question like this, it's also a question about what is the added value that you're bringing in through consolidation.
Okay. Well, I can answer this. I think if you look at the prospect of consolidation, I think definitely. I think if you see 6 to 8 or 12 months down from here, you're going to see some consolidation across the board. Okay, not only the independent provider of part supplier, MRO, and engines, but at the same time, I think OEMs are going to also make their moves into the market where they can get more access and more market share of used serviceable material. So yes, definitely that's in the cards. And of course, the second thing is happening is the liquidity. I mean, there is the money is cheap today, and it's going to be cheap for probably the next 2 to 3 years. As you saw the announcements from Federal Reserves in US, they're going to keep it at 0% interest. So with those two things and private equities, companies coming in and interested in getting into this market, I definitely think I'm definitely think that that's going to be a definite answer on that. Second question, please.
Well, we've got about 2 minutes left, but we did have another question come in. This one says, can you make sure that USM is free of PMA and only maintained per OEM instruction? So not sure if that's more of an opinion or a question, but not sure who wants to take that one.
Anyone? John?
Yeah, I think that would be perfect for Boeing. Let's keep everything non-PMA, and at least on the parts. But I think it's, there's so many customers out there that have different quality requirements and different, they can accept different things. It's going to be a challenge to make sure there's no PMA in any of the parts. So I think it's going to come down to understanding what customer you're dealing with on that day, what their quality requirements are, understanding what you have in your parts, and if you want to participate in the market that can sell PMA, then so be it. I think that from the Boeing standpoint is we're going to go and make sure that we are listening to our customers, understanding what their quality requirements are, making sure when our parts get repaired, we're going to get those parts repaired and get them in a condition that's going to have the biggest market reach, and go for as much certification as we can, so that we are not making sure we don't exclude a certain market when we have a part ready to go. So that's a tough question. It'd be keeping PMA out of parts is difficult to do. And if you're supporting a customer base that is fully on board with PMA, then supply parts with PMA. But from our standpoint, from Boeing's standpoint, we're going to be going after getting our parts repaired and ready to go to market to make it hit the biggest customer base we can.
Great, thank you, John. Jacqueline, do we have a time, or we are running out of time here?
Looks like we are just about out of time, but thank you all so much. I thought it was a great session. And Raul, if you want to make a few closing remarks, and then I'll finish up. Thanks. Sure,
thank you, Jacqueline. So, I think there was a lot of brooming questions we had talked about today, and I'm sure the audience who's listening to it got some insight on what's going to happen in next 9, 10, 12, 24 months in the horizon. Again, USM is here to stay, and it's going to go more. Fast forward, the retirements and aircrafts coming online, it's going to be impacting the asset value, which is also going to help reduce the USM market. And of course, that's going to be a high-cost driver on both airframe components and engine components, which is going to be there. So with that, I thank all the panel member who's participated and giving exciting comments on their views. And of course, the audience, without you guys, we won't stand a chance here. And thank you for all the insight onto the poll questions and answers and some of the questions posed to us. So with that, I'm closing this session. Again, thank you all for joining.
Thank you, Rahul. We really appreciate it. And again, thank you to our sponsor for that session, KG Aircraft Rotables, for their generous support. Our next session is at 10 a.m. and we are covering the topic of aircraft interiors and cabin modifications. Don't miss it. We will see you there. Thanks.